Baby, we live with it. What's going on, y'all? Y'all know the deal. Y'all know the vibes. We got another class. Today, we're going over tips for trading with a 9 to 5. A lot of people, are saying they want to leave the 9 to 5. Some people like the 9 to 5. I personally don't go around encouraging people to leave their 9 to 5 unless, they're like not passionate about it, things of that nature. But I find that most people I talk to, after we talk a couple times, they're like, yo, I want to leave. I'm like, hey, well, I mean, fool with me. We're going to get you there. So if you do want to leave, I'm going to start off by saying, I'm going to start off with some stuff for people who want to leave the 9 to 5. And then I'm going to move into just general stuff for trading, whether you want to stay, whether you're not. Somebody said I'm breaking up, so I'm going to slow down a little bit. I'm going to disconnect this phone from Wi-Fi, disconnect this phone from Wi-Fi, disconnect. This phone is dead, so it's not connected to the Wi-Fi. All right, can y'all hear me good? I just need one Y in the chat that y'all can hear me. Sounds fine on this end. Beautiful, appreciate y'all with the Ys. So we got one person that's saying I'm choppy. Okay, so I'm good. All right, it's recorded. Ms. Jones, you're saying I'm choppy, it's recorded. Everybody else says I'm good. So talking about if you're trying to leave the 9 to 5, because you need to create that income first. So figure out what you need to leave, right? You have to figure out what your number is. And this is going to be me talking about personal experience. This is going to be me talking about things that I've learned, things that I've seen, things that I've also heard have worked for others, but didn't try for myself, although I prefer to only talk about what I've done. And then from conversations, I have a lot of one-on-ones. I have a lot of meetings. I just got off for a one-on-one right before this. So one of the big things people talk about when they're trying to trade, I always ask, why are you trading? And it's important to understand why you're trading in the first place. When you're trading because you want to create enough income to leave your job, you need to figure out how much money you need to leave your job, right? Your job pays you $6,000. Then you need to figure out how you can make $6,000 consistently per month in the market. If you're getting $6,000 per month, right? Or you can base it on a weekly basis, bi-weekly basis, that's up to you. But the first thing is you need to figure out what that number is so that then, because there's so many different ways and styles of trading, you can start looking at how you need to trade your account to get the number you need. All right. So for example, if you have a $10,000 account and you know that your job pays you $5,000 a month, right? So let's say we're going to shoot for $7,000 a month. We're going to account for taxes. We're going to account for commission, things of that nature, right? So let's say we're shooting for 7. I like to go 2,000 over because you want to have that safety net too, right? If your goal is 7, you find out a way to hit 7. Even if you're off, you hit 6, right? You might hit 5. So of course, build up your emergency fund first. That's mandatory. But besides that, you need to start having consistent months hitting your target. And so my point is, if you have a $10,000 account and you want to make $7,000 a month, that's a 70% return, right? So that's doable, absolutely doable, especially when you're trading options. You can make a 70% gain in a month in your portfolio. As you become more experienced and you lay out your strategy and you stick to your rules for your strategy, then it becomes, for lack of better terms, it becomes simple. I'm not going to say it's super easy, but it becomes simple when you create the strategy, you test the strategy, and it works, and you redo it. You do it over and over again, right? So when you're going through it, you have to think about the type of strategy that you require to get that gain. To get a 70% gain on your account in a month, you might have to be a lot more aggressive than somebody who just needs a 20% gain, right? So generally speaking, when people ask me how much do you need in your account to comfortably be able to trade for a primary source of income, and that's the second thing I'm gonna add, is it helps to have another source of income outside of just trading, because you will have bad trading days, bad trading weeks. As you progress, you're less likely to have a bad month because you know how to shake back after a bad week or after a bad day. But you want to still have multiple streams, still have something else, still have your emergency fund, but you want to think about that, right? So when you're looking at that, it would probably be better to do short-term options for somebody who needs to make a 70% return. You're probably going to be going into positions with a larger percentage of your portfolio, right? Which means if you're going in heavier, you're going to need tighter stops because you need to reduce your risk so that you still have capital to continue trading with, right? On the flip side, if you're somebody who wants to make 7,000 a month and you have, and my math isn't the best off the top of my head with some of these things, but let's say you have 50,000 in your account, then for you to get your 7, it's a lot easier, right? It's a lot less risk you have to take on. You could probably trade a lot lighter compared to your account size. And so that's the thing, is you need to look at, one, with what I need to make, is my current account size feasible for me to shoot for that goal? Or does my focus need to be on compounding first, or budgeting in a way that allows me to build my trading account, or creating another income stream that can then fund my trading account, right? There's different ways you need to take this, or you can take this, but you need to make sure first and foremost that you have an understanding of what you need to make per month to be able to leave the job and live from the trading. And then you need to look at your account, and based on that, hey, I need to make 30% a month. I need to make 50% a month. I need to make 20. I need to make 10. And then you can start gauging different strategies and ideas based on that. So moving aside from I'm wanting to leave the 9 to 5, right? Once you figure out your number, it's a lot easier to then go and start planning out, building your account, to then start getting into the habit of withdrawing. And I will say, like I mentioned today in the group, if you are looking to trade in a way that allows you to use it as your primary income or even secondary income, then you do want to start getting into the habit of withdrawing your money, whether that's a bi-weekly basis, whether that's a weekly basis, right? Taking profits at the end of the week. You also want to get into a habit of maybe even adding some in or leaving some in, right? So create your own rule for yourself. At the end of the week, I want to pull a quarter of my profits out. I made $1,000 this week. I'm pulling out 2,500. All right. Get into that habit so that as you continue to scale up, you're not getting into the mindset of, man, I just got my account to 10,000. Okay, I want to go to 15. Okay, I want to go to 20. Okay, let me see if I can get to 30, right? And then you get in this thing of just focusing on building. And you're gonna have those fluctuations. But bad market like such as right now, there could be news that happens this weekend that kills all swings next week. Right? We've been seeing these crazy fluctuations, and you don't want to build up just to get knocked back down without being able to actually realize some of that profit. So that's one of those things. Realize it in your real life. Of course, if you sell, technically it's realized. So aside from that, number one, create a easy to follow trading system. Find or create, right? There's tons of trading strategies. You can Google swing trading strategies. There's tons of them that'll come up. But you need to find or create a strategy that's easy to follow, because it's going to have to work for you, right? People have different schedules. You have some people who have mandatory lunch hours. Some people have flexible lunch hours. Some people work full time, but their full time is 3 days out the week, right? So then maybe you could day trade the last 2 days. If you're in the hospital, you might not be able to be on your phone, but you could get in a trade at open, but you have to hold it through the whole day. You know, there's people who have jobs where they can't be on the device. So find a strategy or create a strategy that works for you. And we covered last week a couple of different swing trading strategies. The week before that, even, I think we also covered creating swing trading strategies. So if you haven't already, look at those past videos, my last 2 classes and my video lessons, where we talked about creating a strategy. We talked about different strategies for swing trading. But you need to have a system you can easily follow, because you're not able to actively look at things during the day. You're not able to actively manage positions. And we'll talk more about some different things to help with that later. What I did when I was working full time in swing trading is I set up different screeners. So one of my main websites I used was FinViz, FINVIZ. All right, and FinViz, which we have a walkthrough video on already as well, FinViz allows you to pull up a ton of different charts based on a ton of different criteria, and then you can already have it sorted out, and then you can go ahead and make trades and make plans based off of that. So what I tended to do was, after I got out of checking FinViz every single day, setting up a plan every single day, I would use the weekends. Over the weekends, because I had time, I would chart out everything for the upcoming week. I'd make a weekly watch list, and then I would set alerts, right? So I use TradingView. TOS has alerts. Webull has price alerts. The different ways you can get your alerts. What I would do is I would set alerts on TradingView so that while I'm at work, if one of my stocks hits a certain level, say I'm trading a bounce off of 100 support, if it hits 101, then I know I'm moving up. My phone will ding. I'll see TradingView. I can step away from my desk. I can go to the bathroom. I can go to the break room, wherever you need to go. Enter that trade, and then I can go back to my desk, right? And so that way you can have it up there, and you can also use alerts for your stop loss, right? Because you can't look at the chart every day, depending on your position, you need to be able to use, and you need to be utilizing these alerts to keep up with the price movements, because you don't want to get in something, have 3 meetings, go over here, take phone calls, and the whole time this position is going down against you because the COO just made a bad decision, right? So utilize your alerts, create an easy to follow trading system, swing trade, right? So swing trading is when you're holding something for longer than a day. I'd say up to maybe 3-4 months. After that, like 5-6 months, now that's like a position trade, entering like the leap area, right? So with your swing trading strategy, you can do short-term swings. Last week, I did a bunch of short-term swings, a lot of next day, or the week before last, but one of those, last week, week before last, I did a lot of next day, next day, next day. And so you can get into that, and that can be part of your strategy, is looking for trades that might be shorter term oversold, for example, right? So you're familiar with the RSI. The RSI on the 14 goes below 30, is considered oversold. What you can do, what I've done in the past, is mess around with those indicators. I'll take the RSI, instead of looking at a 14-day period, I'll look at a 5-day RSI. And so now I know that the past 5 trading days, it's oversold and it might bounce. Again, that's something to test. I've tested multiple different ones, and I think we also covered that in another class. So test things out, but don't be afraid to adjust some indicators. Don't be afraid to adjust your time frames. If you're going shorter term, then I would be trading off the hourly. If you're going, maybe a week, then I would definitely be, mainly entering off a daily. If you're going 2, 3, 4 weeks, then of course the weekly. And you can look at the monthly. I'm not discouraging you to look at other time frames, but those are the main ones I was looking at. So definitely swing trade. All right, buy more time than needed on contracts. I'm gonna pause here because I get to going and get to flowing. I'll put Y's in the chat. This is making sense. Throw an N in there if you're confused about anything. And then if you have a question, please put your question in there, so I can cover anything that I already covered, circle back, give some more clarity. So I want to make sure that this is making sense and y'all are getting it. I want it to be helpful. We got a bunch of Y's. That's what I like to see. Give myself a Y. Oh yeah, Dennis dropped the money signs. That's the one I got to use. Give me the money sign. But cool, so this is making sense. I'm gonna give it another couple seconds, see if anybody has a question about anything I've already talked about. Because you can do it. And that's part of the reason I was swing trading last week, was because our primary swing trader was out in Mexico. But the other reason was because I also wanted y'all to see that even in the market being what it is, you can still swing trade. That's another thing I'm gonna talk about. You can still swing trade right now. A lot of people would say you can't swing trade. Still swing trade. I don't know what Dennis is talking about. All right, cool. Oh, what about healthcare? You gotta make enough money for that, bro. Just make more money. A lot of I'm gonna be real with y'all. A lot of times, when I was preparing to leave, that was one of the things my family was saying. My family, my closest people were like, yo, my folks bought me a cake. Like the day I left my job, my mom bought me a cake. She said, congratulations. But people were talking about, healthcare and things of that nature. My solution is make more money, right? So once you start getting your trading down to where you have a strict set of rules that produces money, it's really, at that point, it's just a matter of you sticking to your rules, right? Once you know that when I see an uptrend, this is like my go-to because this is what worked for me a lot when I was swing trading is uptrend, support, bullish candle. I'm entering 2-3 weeks at the money or one strike out the money swing, right? Once you find something that works consistently, and like the support's my stop loss. So again, I'll say that again. Uptrend shown by being over the 200-day EMA. Support, right? So we're looking for a pull back in the uptrend to a support level. Bullish candle or bullish candle pattern. This could be an inside bar breakout. This could be hammer candle at support, bullish engulfing at support, different types of candles. A break above that high, and then my stop loss being below the support. That worked for me. When I track my trades with a one strike out the money, 2 to 3 week expiration, consistently double my account, consistently 80% win rate on swings. So you can do that. And once you do it, you just repeat it because it works. Once you find something that works, you just continuously repeat it, right? So you can scale up. Once you figure out how to take 1,000 to 2,000, you can take 2,000 to 4,000. You can take 4,000 to 8,000. As long as you're doing it in a way that's structured and you weren't just like full porting a random lotto, hoping to hit it, and you know what I'm saying? You got it. I'm mainly focusing on options for the swings due to beginning account size. Yes, so you can trade, you can do shares as well. Prior to me doing options, I was swing trading shares. So you can do shares with options, even with your account size being potentially smaller, you could just trade smaller stocks. All right, so there are liquid stocks that you can trade that are smaller. You can always look in Zaid's channel. He trades a lot of smaller stocks, but he trades Lucid, Ford, GM, NEO. A lot of them typically are going to need some sort of catalyst that's going to cause them to move because they're typically not giving big moves. But all of those, Snapchat, Twitter has had a lot of news lately that you could have been trading with Elon. It's a lot of them. Delta, a lot of the airlines, so airline stocks, vehicle stocks, or automotive, I guess would be the technical term. So yeah, there's different stocks, a lot of smaller stocks, even if you have a smaller account, you can do that with. Question, what is the smallest amount to start with? So like I said, you need to first acknowledge, if your goal is to leave the job, you need to acknowledge how much you need to leave. Then you need to acknowledge how much you have. And based on your trading experience, based on your current level of knowledge, what percentage gains would you need to make, right? If you're starting with a $5,000 account and you want to leave the 9 to 5 and you need to make 7,000 a month, that's over 100% return you would need just to make the money. Then you have to do it again month over month, right? Which is unrealistic for you to expect from yourself. So that's something to think about. As far as starting though, you can start with anything. I just did an account from $78 to $800. Don't expect that and put that on yourself. I've also been trading for 10 years. All right, so don't expect that on yourself. But you can start with pretty much anything as long as you have the proper strategy and system in place to grow it. The same methods you're going to use to grow 78 to 800 isn't the same method that I'm going to use to take 800 to 1,000 or so, because the first one, or past 1,000, the first ones are much more aggressive, all same day expirations. Right now that you have money to play with, you have more of a safety net, you can do things different, right? How long should you make money consistently to quit? So of course you have your there are two other things in place. So I would definitely, no, I don't give financial advice. This is not financial advice. I'm not a financial advisor. Gotta say that, right? Once you have your emergency fund, right, you need 3 to 6 months, preferably 6. You can go 12, but preferably 6 of living expenses saved. All right, once you have that, then you have another stream of income, preferably, even if it's not a big one, but you still want to have something else, because realistically, you could, I don't know, you could get locked out of your account, you can, whatever, right? Things could happen. So I would say realistically, you want to have another source of income. And then after that, I personally did 3 months. So I had a certain number I wanted to hit 3 months in a row. I hit it, and you want to be comfortable with it, right? So you hitting your target, if your target is 10,000 a month, you don't want to have 3 months in a row where you played earnings and got lucky and hit it, or you blew 3 accounts and then the fourth account made 10,000 because you were full porting earnings lottos. That's not a strategy for consistent success, right? So you want to have, for me, it was having 3 months where I made enough profit to be comfortable with, and my trading was comfortable, and my trading was consistent, all of that. It was easy. It wasn't stressful. I was good, and it just flowed. And then I was like, okay, cool. I know that I can do this. And then when I leave here, I know I can still do this. That's the point you want to get at, right? You have to be real with yourself. You can't lie to yourself, right? You can lie to everybody. You can't lie to yourself. So you have to be true to yourself and say, can I keep this up? And that's why number one was create an easy to follow trading system. Because if you don't have a trading system, or any sort of repeatable methodology for your trading, it's going to be hard for you to continuously do something that you don't have an outline for, right? If you give somebody a blueprint to build a house, you give it to a company that builds homes, they can build the same house over and over and over and over and over and over and over. You can give it to another company that can build the same house, right? You got to have a blueprint for your trade so you can repeat your success over and over and over and over and over. I'm going to take 2 more questions before I pop back to the flow here. Where you swing trading off the daily charts with contracts 2 weeks out or in the money. I was swing trading based on daily price action with 2 to 3 weeks out. I would adjust it, and I was swinging them with 1 strike out the money typically. Typically, my strikes out the money would be 1, sometimes 2. My kind of rule of thumb was never have a contract that I bought that was more strikes out the money than weeks on the expiration. So I wouldn't get 2 strikes out the money on a 1 week expiration, right? If I'm going 2 weeks out, my max out the money is 2 strikes. I'm not going 3 strikes on 2 weeks. That was just one of my rules that I gave myself. And then the last question I'm gonna take before we get back to the breakdown here. How would you suggest we follow our trading system consistently for a few months while working our 9 to 5? So your trading system, times like this, when you get off work, when it's the weekend, that's when you craft your trading system. That's when you utilize the alerts. That's when you set these things up so that you can consistently do it while you're at the job, right? And if you can't do alerts, if you're in a job where you can't look at your phone, then if you can hit the bathroom break type of deal, but you got lunch, if there's some way that you can have a scanner, you go into the next week, if you have kids or whatever extra going on where you can't really look at stuff during after work, if you go into the next week on Monday, you already know what charts. You have 10 charts already laid out. You have them marked up. Which way, if this hits this, then it's likely to continue up. Like I said, if we have a chart that's in an uptrend, pull it back to $100, once it breaks 101, I'm looking at it to go to 105, right? That might be my swing plan. So I'll set that alert for 105 or 101. It breaks that, step away from the desk, into the trade, and then set my stop loss to give me an alert if it goes back down to 99, because now it's broken that 100 support, right? So that's how you start doing it. You start laying it out just like that. That could be your setup. The other thing, which is actually number 5, which is my next, nope. Yeah, number 5, which is my next point, is it's helpful to play both sides of the market if you're going to be aggressive, or if you're going to be more conservative, lightly trade in the overall trend. So what you don't want to do is be a perma bull, right? Be somebody who is just like all deep, and it can be either way, but you don't want to be all the way in on one sentiment with the market. You don't want to be in all puts. You don't want to be in all calls heavily, right? Now, if you're lightly in it, if you're trading, a quarter of your portfolio, that's different. But if you're going to have half of your portfolio out in the market at once, which I know majority of the people in here do, probably have all your account out at one time instead of keeping cash. Keep some cash. I'm going to add that in here. Keep some cash in your account. But if you're going to do that, you don't want to have it all in calls. You don't have it all in puts. And this is one I've taken from experience where the market markets, you know what I'm saying? News, companies, whatever, overnight, 18 million people get COVID and are hospitalized and the market drops and now all your calls are knocked out. You don't want that to be your situation, right? So when trading both sides of the market, you flip the rules, right? So you're still going to be trading in the overall direction of the trend. But what I would do is I would find, instead of stocks that are in an uptrend and over the 200 moving average, I'd find stocks in a downtrend below the 200 moving average. Then I find stocks that are in the downtrend, they pulled back up, hit resistance, and then I'm looking for a bearish candle. It's an inverted hammer, it's all different types of candles, right? Different types of candle patterns, yada, 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 right? We got dojis, all that. So once I see these reversal indicators, then I'm getting in and again swinging one strike out the money, typically 2 to 3 weeks, which is back to number 4, which was buy more time than needed. The reason I would get extra time is my plan would still be to close it earlier because I think it's going to hit my target in 2 weeks, but I would buy 3 weeks so that even if it didn't hit my target in 2 weeks, I still have value in that contract and I'm not holding a contract that expired worthless, taking a 100% loss. So I have the full time to let my trade play out. I don't want my trades having me have to get out of them before I'm ready, right? No, I want to be in my trade as long as I want to be in my trade. So if I think it's going to take 2 weeks to hit my target, then I'm buying 3 weeks of time so I can use that full 2 weeks instead of having to use 2 weeks and then having a zeroed out contract, right? But playing both sides of the market, if it's already trending down, it's at resistance or it pulls back up to resistance, forms bearish candles, and then it continues to drop. And you also have something that's moving up, comes back to support, and it continues up. In both those instances, those are high probability trades, regardless of the market, and you're likely to win, right? Even if the market is moving up, if this other stock is in a downtrend already and the market's in an uptrend, clearly the stock is moving inverse to the market anyway, right? The boost is that if there's great news, maybe this stock that's on the put side doesn't go down as much, right? But the one that's on the call side shoots up, vice versa. If there's negative market news, the calls drop a little bit or that stock doesn't go up as much, but the put goes crazy, right? So that way you're hedging yourself, you're protecting yourself. And again, that's the aggressive side of it, because like I said, you don't want to be caught up where just like last week, anybody who was puts, the market is going to 350, the market is going to 350, all in puts. Well, look, now we're at 385, right? And if you were just holding all these puts just because, you got messed up, right? So that's something to keep in mind, right? Trade your plan strictly, right? Stick to your plan and strictly trade it. Because you are at the office, you're not spending hours looking at charts all day. You're not spending hours analyzing data. You're not spending hours studying, so you need to create a plan that works and stick to it, right? You don't see Steph Curry trying to go dunk on folk. Steph Curry says, I'm about to get open, create space, hit a three, right? Majority of the time. Stick to that plan that works for you, and then you can continue to have success. Back test. So you are making trades based on strategies you know are high probability. Y'all know I'm all about back testing. Hoop Central said facts about that Steph comment. Exactly. I'm all about back testing, right? So what back testing is, for those who don't know, back testing is just the process of going and looking at past data, studying and analyzing past price action numbers, things of that nature, to see or to find potential ways to analyze the future data and predict future data. So for example, real simple would be, if we go and look at this whole year, we pull up Apple on a one-day chart, and we go look at the RSI, right? Most people who know indicators are familiar with the RSI. If we pull up an RSI, put it on Apple, and we go back the whole year and we look at it and we say, hey, what if every time Apple hit 30 on the RSI, we bought in and we sold 4 trading days later? What would the results have been? Right? That's a back test. That's a strategy that you can then go back test. You have an entry rule, you have an exit rule. 4 days sell, entry, Apple hits the 30 RSI. Right? And so what you do is you go and look at it. And from there, you can say, oh, damn, that wasn't going to do nothing. Or, oh, damn, I might have won 3 out of 6. Man, that ain't really worth it. Right? What you can do is look at that further and say, okay, so I'm noticing that the 3 that I won was when Apple was trending up. The 3 that I lost, Apple was oversold in a downtrend and it just continued down. So then maybe you implement a new rule and you say, okay, when Apple hits a 30 RSI on the daily, while it's above the 50-day moving average, the 200-day moving average, the 100, the 20, whatever, right? That's how you test different things. That's how you create strategies. Again, I just taught a class on this where we literally sat here and created like 2 strategies that worked. And we went like 7 for 8 on these strategies that we've sat and actually went through SPY the past like month and tested out. So these things work. But once you have that thing, stick to it, right? Stick to it. So back testing. Number 8, focus on slow and steady wins the race. Okay, y'all know the tortoise and the hare. I'm not going to get into all that. But keep in mind, this isn't a race to make $1 million. This is, I want to be able to trade while working and supplement my income. An extra $2,000 a month covers my mortgage. An extra $1,000 a month covers my car note and my wife's car note and our child's car note, right? An extra $500 a month covers my car note, right? So keeping those things in mind, that's how you start to scale. And that's the other thing to do is, like I said earlier, get in the habit of withdrawing. I was talking to somebody earlier this week, and they said they wanted to buy something. I said, trade, make that money, pull it out your trading account. Right? And they had been making money in their trading account, but they never withdrew it. I'm like, what's the point? You told me the point of you trading was that you can use this money for real. Do it. You know what I'm saying? And again, that's you creating the habits of actually sticking true to what you said, not lying to yourself, but sticking true to, okay, boom, I made 500 this month, or I made 500 this week. That's the car note. I'm gonna go ahead and withdraw to a bank account. Boom, pay the car note off, right? So you want to stick to that idea of building that account. You want to keep some money in the account, right? Don't pull all your profits, because as you compound, then you need a smaller return to get the same amount of money, right? Getting $1,000 return on $1,000 is 100%. $1,000 return on $2,000, that's just 50%, right? $1,000 return on $10,000 is 10%. It's a lot easier to get 10% than it is to get 100%, right? So build it up, slow and steady. All right, I'm checking in on y'all. I hope y'all ain't sleep. Give me Y's if we good. Give me dollar signs. Forget the Y's. Dollar signs dollar signs, dollar signs. I need dollar signs if this is making money, making sense. If y'all are getting it, if it's helping y'all. So again, the point of this is to help y'all. As teachers used to say back in the day, I don't do this for my health. My mouth is actually getting dry right now. So I want to make sure y'all get this. And take these and like literally this weekend, do some of this stuff. Like this weekend, pull out your laptop, pull up TradingView and backtest. Google how to backtest. Right. And I do have videos on that as well. But look into that. Right. Google swing trading strategies. Test them out. There's nothing stopping you from Googling swing trading strategies, pulling up 5 different strategies where they're like, hey, use these moving average. Hey, use this indicator. Hey, whatever. There's nothing stopping you from doing that, pulling up a chart of whatever you like to trade. I see my boy Christian in the chat. He loves trading QQQ. Pull up QQQ and test those 5 strategies over this year. What is it hurting you? But if you can test that strategy over this year, we've had bullish overall sentiment this year. We've had bearish. Test that strategy, see how it would have performed. And since we're at the middle of the year, you can then test that strategy live if it performed well the rest of the year. You can use it. You never know. You might come back next week with a whole new strategy, right? So test it, tweak it. Like I said, notice different things about it. And then you go ahead and go from there, right? So cool. Everybody's good. I'm gonna pause here again for questions. Any questions about what I've covered so far? I'm gonna set a little 30-second stopwatch. Hopefully y'all type more than 20 words a minute. See if there's any questions about what I've talked about so far. All right, Greg, this makes sense, but not sure where to actually start. For someone brand new, is there a last video or videos I suggest to start so you can learn not only the strategy, but the techniques and terms I mentioned? What's up, Greg? Yes, bro. So in the Discord, there's a section under education that's called, it might be in Start Here. There's a section that says trading courses. I have a free beginners training. Start with that. If you're brand new, if any of y'all are brand new, hit the Discord. There's a section that says trading courses or something like that. And there's a free beginners trading course that I put together that gives you an intro to a lot of different areas, covers a lot of different topics, so you have an idea of what's going on. After you do that, I would say the mod video lessons in the Discord is where we put all of our recordings just like this one, so y'all can go back in and review them. So there you'll be able to see the ones I just referenced. My last 3, I think, is where we cover the different things I talked about. And then there's also a section for stock-specific trainings and all that. So you got tons of education in there, bro. But definitely start the free course. Let's see. Which time frame do you look at for short-term trading? When you say short-term, today I just looked at the 1 minute, I think, all day. So it depends on what you mean by short-term. Scalping, 1 minute, 3 minute, 5. Day trading, holding it for maybe like an hour, 2 hours, 3 hours. You can go 30, 15, 5. Short-term swings, I'm looking at daily and 1 hour mainly, and 30. And then like a week swing or so, weekly, daily, 1 hour. All right. So hopefully that gives you an answer. Was I full porting? Dennis, you were full. Carlos said this Discord is fire. Appreciate you, bro. Were you full porting when you were swing trading shares? Yes, I was. So when I was swing trading shares, I was full porting, and that's just the honest truth. I back tested the strategy over 15 years. So I'm gonna put the back testing website I used in the chat. profitspie.com. I talk about it all the time. So I tested the strategy. The test ran from December 12th, 2003 to December 12th, 2018. 15 years of data. I tested the strategy, had the rules for entry, had the rules for exit. And what it did was it was a full port strategy, started with $500. It produced $1 million in profit over the past 15 years. It had a 67 annual ROI over that 15-year period. And then it also had a 70% win rate, 69.8. So it had a 70% win rate over 15 years. It had a 67% annual return, and full porting with $500, full porting every single trade. The back test gave $1 million in profit, total net profit. So yes, I did full port every single time I was swing trading, and my closest efforts to replicate that. That's just the facts. Somebody asked you to explain full porting. Full porting means putting your entire portfolio on one position. You should absolutely, positively never, ever, ever, ever do that. DM me if you want to talk about something. All right. Do you see a big difference in using TradingView versus TOS, Thinkorswim? I use TradingView. I have used Thinkorswim. Both are great platforms. I like that TradingView easily integrates to TD and you can enter trades right off the chart. For me, TOS had a lot going on, and that's what pushed me away from it. It was too many features, and I had already been trading off of TradingView for years at that point. I was using TradingView for my charts, so I was already very comfortable with TradingView. TradingView was just charts, and TOS just to me had a lot of extra stuff. I gave it like a week or two. I couldn't really figure it out, and I was getting tired of fumbling around trying to figure out how to draw trend lines and how to zoom in and out consistently. TOS definitely has, like I said, a lot. I think TOS has a lot more functions and a lot more features. But my efforts shifted to how can I make my trading simpler? Still profitable, still comfortable, still consistent, but simpler. And so that's why I stick to TradingView. Kari, earlier I said uptrend, bullish candle. What else was missing? Support. And that could be a horizontal support level. That could be a trend line support. So uptrend, support, bullish candle. 2 to 3 week out expiration, one strike out the money. That was my strategy. I don't recall my profit taking method for that. That was back in about 2018 or so. You can link your brokerage account to TradingView. Somebody just put that in the chat. I think it depends on what brokerage, unless they have updated it recently. So last time I checked, there was very limited brokers that you could link to TradingView. That's always something you could Google as well. What else we got? TD charges you 65 cents per contract. Is there a lower price? Tastyworks, I use Tastyworks a lot. Tastyworks, I just looked at their fees. I don't recall, but you can look at Tastyworks. They do have commissions. But I want to say the commissions are lower than TD. I hope they are. Didn't catch Kari's question. Kari's question was regarding my swing trading strategy a couple years ago, and that was looking for uptrend with a pullback to support, followed by a bullish candle, and then I would wait for the high the next day after that bullish candle forms and finishes. I'd wait to break the high of that bullish candle, and then I would swing it 2 to 3 weeks out, one strike out the money. What is percentage of my stop loss and options is very easy to get triggered? I don't use percentage-based stop losses. I use price-based stop losses. So when I'm trading, I don't look at my P&L like that. I only look at the P&L so I can let y'all know that we're up a certain percent or we're down a certain percent in what I'm doing. My stops are based off of price or if it's an indicator-based strategy, then it will be based off the indicator, because it is easy to get triggered with a low stop loss percentage, but a percentage doesn't mean that the trade went against me. So I don't get out of my trades usually unless the trade, well, not usually, unless the trade shows me that, yeah, it's done. Right? If I was bullish, market flips bearish, you have to be flexible with that, right? So once I understand that the market has now flipped bearish, I'm like, all right, it's probably time to close this. Or if I'm going on puts and we flip to a bullish market, or for the day, for the time frame I'm on, yep, time to get out. The other thing I do with stop losses is I use a trailing stop. So if I do a trailing stop, if I'm looking at my computer like I was today, I was standing right here for probably 3 or 4 hours of my day today, with the 1 minute chart pulled up for SPY. If I am standing here, then I'm using a price-based trailing stop loss. And so that would be based off of either, the recent highs and lows, or I'll use a candle-based stop loss, where I might look at, 2 or 3 candles and say, okay, I'm looking at the low of the last 2 candles. All right. How effective is dark pools and unusual options activity for trading 9 to 5? I didn't try dark pools with options when I was trading 9 to 5. I still haven't really tried dark pools with options, period. I've done equity positions with dark pools, because with dark pools, I don't really know the time frame. With unusual options activity, which we just covered last week, to an extent. With unusual options activity, I did find it good with trading. I still like to combine it with charts. So any of those things like dark pools, like unusual options activity, any of those things, I like to still combine them with the charts. Right, I use it as ideas. Right, so I'm like, oh, okay, cool. $1 million in premiums got put on CVS. Let me go look at this chart. And even if the chart isn't just crazy beautiful, I'll take in consideration $1 million in premiums got put on CVS, and CVS don't be popping like that. I'm likely still gonna, engage with that. So dark pools. What are dark pools? Dark pools are large institutional orders that are placed on private exchanges so that they don't screw up the numbers for us regular folk. You may have already mentioned this, but what are your key elements of a trading plan? Oh, so additionally, Charlotte, what you could do is look at the chat in the Discord, look at the dark pool bot. And what I would do is just look at maybe dark pools from a week ago to 2 weeks, and then see what the stock did following that. And it's just the easy way to kind of see. So DC said, you may have mentioned this already. What are your key elements of a trading plan? Time of day, risk parameters, 4 trades a day. I actually did utilize something like that. Did you literally write out your plan, fund the account with a specific amount and start? That's funny, bro, because so like I told y'all this week, and again, I apologize for having 3 losses this week. That's the first time in, I think, 2 months. I don't think I've had 3 losses in a week since April. What month are we in? 3 months. But I was testing a new strategy, and this week, I was testing it out. 1 contract, testing it just to see. And it worked pretty well. I made tweaks along the way, learned things. So what I did was I funded a new account with $3,000 so that I could then test the strategy with $1,000 per trade per day, right? With only 3 trades, right? So you don't want to be over trading. I don't want to sit here and take 7 trades. So that actually is something I'm testing out next week, is probably Monday, Wednesday, Friday, same day expiration, SPY in the queues, 1,000 per trade, and going from there, only 3 trades a day, right? But as far as other trading plans, yes, it's always some sort of blend of that. So the trading plan can have time of day to trade. What I found is when I'm trading off the 1 minute charts, I usually wait until after the first 30 minutes of data have already went through, 30 minutes of price action is done. Sometimes even later, because you still catch those moves because you're scalping. You're not looking for big swings. You can scalp a 50-cent move and be good. So yeah, you set up your trading plan. It can be time of day, it can be risk parameters, but it's going to be strategy specific. Certain strategies have a lot more loose, like the profit calendar, for example. And that's in another Zoom that we just did last week. The profit calendar doesn't have percentage-based stop losses or percentage-based take profits. It's all time-based entry, time-based exit, right? But through testing and through data, that works for that strategy. And if you used a stop loss, percentage-based stop loss with the profit counter, there will be a lot of times that you took losses that if you didn't use a percentage-based stop loss, you wouldn't have lost on, right? So it's all about testing. That's the whole point of pulling up the chart. That's the whole point of using these websites to back test so that you can go through and you can see, hey, this strategy needs a little breathing room. This strategy, it usually shoots right up. And if you don't take profits, as soon as it goes up like 10, 20%, you need to go ahead and cut that. You know what I'm saying? So definitely test it out. As far as writing it out, I don't write them out anymore, but I think that's just because of my experience and how I've progressed. Sometimes I actually do write them out. Sometimes I got a bunch of index cards, so sometimes I will write them out. But usually I know in my head because I'm actively tweaking. I'm like, okay, yeah, that didn't work, but if we switch this and adjust that, okay, let's run that next 5, and then I'll back test it too for validity. So yeah, I do both. All right. Oh, I forgot we still got 2 more things. All right, spreads. Nate did a class on spreads. Check the recordings. All right. So credit spreads are going to help you with your swings. Quick, and again, this isn't going to be a class on it, but Nate just did a class on it. Credit spreads, essentially what it allows you to do is set up a profit area where as long as the stock stays at or above, if it's a put credit spread, which is bullish, call credit spreads are bearish. But a put credit spread, which is bullish, will basically be you be saying, if as long as it stays at or above this price by expiration, I'm securing all this premium. So simple terms, do your research this weekend. You can have a credit spread. You can have a stock that's at $76. You're bullish neutral on it. You think it's going to either stay the same or go up. If it goes from Monday to Friday, if you bought a 1-week credit spread, it goes from Monday to Friday, and it finishes on Friday at 76.50. It moved up 50 cents in total at the end of the week. You could possibly secure 90% ROI on that because it's credit spreads. And the beauty of it is because it's a credit that you're taking in, because you're also selling a contract, you have time on your side and it's favorable. As time goes on, as time decays, the other contract loses value, you collect more premium. Debit spreads, they don't make time help you at the end of the day because you're still taking a debit, which means you're buying, you're not selling, you're not taking a net credit. But because you're selling a contract, time decay is reduced on your side because that other contract is, again, bringing you in more premium. So it's more effective if you're not wanting to trade. If you're not wanting to trade just naked calls or puts, you can do spreads. The other thing is spreads are really good for building smaller accounts or building any sized account because your risk is already outlined. Credit spreads, debit spreads have a predetermined maximum profit, maximum risk, right? Whereas a call, for example, has theoretically infinite profit potential because the stock can go up theoretically infinitely, right? And then puts are limited just because the stock can go to 0. So learn spreads if you want to build a smaller account. It's a lot easier. If you want to build any size account with a lot less risk and you don't have the time to pop in and check the premiums and updates during the day, spreads are a good way to go. And then lastly, learn multiple strategies so that you can trade in any market condition. Y'all have seen me, depending on how long you've been with me, you've seen me swing trading, basically like I just was saying. You've seen me go a month of day trading off the 1 minute chart. You've seen me scalping off the 1 minute chart. You've seen me day trading off the 5 and the 30, bull market, bear market, puts, calls. Last week I was short-term swings because our swing trader was out. This week I was doing more scalps. So you need to be able to have multiple strategies, even at the 9 to 5, where you can trade any market. You need to have strategies that work well. We're in a trending market that's bullish, a trending market that's bearish, and we're in a market that's ranging. All right, because you want to be able to make money regardless of the market. Remember, we trade the market don't trade us. So if the market's moving sideways, we're not shooting calls off at, just off. We're not shooting puts just off. All right, we start getting in the iron condor bag. That's a different story. But you start learning to trade the range, right? Learn to trade the range. Or again, like I just explained to you with credit spreads, you can set it up to where as long as it stays above this price at the end of expiration, you're good. You don't need it to go up. It can, that'll help you, but it can literally just stay above here. The stock can go like this the whole week. And every day with the credit spread, you're just going up further in profit every day. Just like how if you buy a call and the stock moves sideways, you're going further into loss. With a credit spread, every day you're going further into profit. All right. So those are my 10 tips for trading with a 9 to 5. Thank you all for coming. Thank you for coming out. Did a cash put buy accidentally. Y'all got any more questions, drop them in the chat. Y'all know how we do most Fridays. I'm going to go ahead and answer any questions. I'm going to take 5 minutes to see if there's any questions that come through. But if at any point there's 30 seconds without a question, I'm going to stop it. Then I will allow everybody to unmute themselves. We could chop it up. We could talk about stocks, the economy, whatever. I don't plan on being here till 2 a.m. I don't know. Then again, y'all. Oh, I'm still recording. All right, let me. Y'all know how I get down, man. Vivian says, thanks for the information. Always a great class. Thank you. Fina said, much appreciated. Thank you. Latoya, thank you. Great tips. Thanks, Jordan. Appreciate it. How do you recommend trading 0 DTE? Man, you over here. We doing that next week. How do I recommend trading same day expiration contracts? And we talking about 9 to 5. Don't do it at the 9 to 5. You be on the Zooms all day. Anyway, trading same day expiration. I think you definitely want to stay as close to the money as possible, buy in the money even, because you just, same day expiration, at the end of the day, I think you're really just playing a game with the Greeks, really. You need a move to happen quickly. You need a move that's going to be decent sized. That's what you need. You need a lot of speed and size, speed or size. Pause. I'm still recording, sorry. On the same day expiration. So it depends. You got to test stuff out. Breakouts are very good for same day expiration because, again, you have sizable moves and you have speed on those moves. I would say that you don't want to get caught chopping around in same day expiration. You don't want to get caught trading the range. So I think breakouts are really good. Orbs, like somebody said, which is a breakout. I would say with the orb, because that would be you would be day trading. If you're trading orbs, you're day trading. So if you're in a position, it gets a little different if you're in a position where you can actively trade, right? If you're at a job where you have like a corner office and you have dual monitors and on one screen, you got trading view, or you got the Discord open, or you got 3 monitors and you got trading view, the Discord, and then your actual stuff that you're supposed to be doing for work. If you're working from home, it's a lot different. But for those who are going to the office around a bunch of people, this was more so who this was geared to, because for you, it's a lot different if you're just at the house. You can do whatever you want. Yes, Dennis, create a plan to make 200,000 a year. Dennis, I'm working on it, bro. I'm working on it. I'm getting close, bro. I'm gonna tell you this. That's why I'm testing this stuff. That's why I was up 1 to 5 in the morning the other day testing. That's why I took 3 losses. You know how much it hurt me to take 3 losses this week, dude? But it's worth it. We getting there. Orb is an opening range breakout, Donna. So that just means looking at, for example, a 30 orb would mean looking at the first 30 minutes or taking a 30-minute candle, looking at the low, looking at the high, low, and then trading a breakout of the range formed in that opening candle, right? So an opening range breakout. That is an orb. And I realized actually when I go and review, because I do review all my trades, I go review. A lot of times I review them like right after, but I will definitely review them at the end of the day. And I realized a lot of my trades were like 30-minute orbs. On the 1-minute chart, I was breaking down the entry, but in reality, it was a 30-minute orb a lot of times. Carlos said, "Goat, appreciate you, bro. Let me know how much once you're done. I'm trying to accelerate the learning curve." Dennis, talk to me. Somebody says spreads are great, but I noticed it takes a few good minutes to fill. Yeah, spreads, especially credit spreads. But it depends on what you're trading. Like when you start getting into the spreads, you have to be trading something that has a lot of volume, is very liquid. Trying to trade a credit spread on United Health or Booking is going to be a lot harder, like than sticking to Apple, SPY, things of that nature. But you definitely do have to play around with your fill sometimes on your credit spreads. Now, that's one of the reasons why I really like Tastyworks, is because on the Tastyworks platform, you can structure your spread and it'll tell you immediately, your win, your risk to reward based on a price movement. And they have all those different things up. They have all types of option strategies already pulled up. And I didn't even know I was using this phone. I'm actually on one of my other phones right now. But so it'll automatically pull up for you vertical spreads, strangle straddles, iron condors. If you're trading a covered call, butterflies, jade lizard, calendar spreads, ratio spreads, like it'll automatically pull it up. If you just say, I want to trade a calendar spread, a long put calendar spread on SPY, like it'll structure it out for you on Tastyworks. I don't trade those, but for sure. Christian said, 0 DTE full port, let's go, JK. What do you look for in identifying trend switching? Is there a time frame you glance at for intraday trading? So when I'm intraday trading, I'll look at one. I look at the 1. I look at the 5. I look at the 3. I look at a bunch of them. I'll flip through, and then just see how we're moving overall. Because again, it has to happen on the 1 to happen on the 5 to happen on the 15 to happen on the 30 to happen on the 1 hour to happen on the 4 hour to happen on the daily, and all the time frames in between, right? But if you see that we are flipping bearish on the 1, take today for example. Today we went up, we gapped up, came down, shot up, came down, went back up, came down. It retested the high of day like 3 times. So in the 1 minute, we were flipping bullish and bearish multiple times, right? Then on the 5, I think we might have like started looking bearish maybe on the 5 once, but if you look at the 30-minute chart, 30-minute chart might not even look bearish right now. If you look at the 1 hour for today, it doesn't bearish, right? Or the daily, it isn't bearish for the day. The daily is very bullish, or at least the weekly, I know, was very, very bullish, right? So you can still look at the other time frames and see, have we flipped to bearish on the 5 or on the 15? And that's just when you see lower lows and lower highs. Lower lows, lower highs, bearish. Higher highs, higher lows, bullish. Do I have a video on the orb strategy? Somewhere. So the answer is yes, but where you can find it, it's probably tucked off in one of my courses somewhere, or it's tucked off in the Discord somewhere. If you put that in like class ideas in the chat, I might just run a whole class just talking about it. But it's a pretty simple concept. Time frame continuity. That's right. How does premium work against you in same day expiration contracts if you're just ranging? Without getting too complicated, think about the fact that your contract will expire. And thinking about it, and this is like the easier way for a lot of people who are newer to get it, is as the day goes on, your contract is a lot less likely to expire in the money and be worth something because your time is going away. There's less time for it to move in your favor, right? So if somebody wants to purchase your contract, right, your bid, your ask, right, nobody's going to be trying to purchase your contract if it's continuously losing time because it's continuously having a less likelihood of finishing in the money, which would then make me lose money by purchasing your contract if I want to exercise it, right? So that's the simple, non-complicated way without me trying to sit here and make it all theta this, delta that, gamma this, da 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 da. Do you personally buy at the ask or bid when doing options? Depends on how aggressive I want the position. I did buy some, I think I bought 2 contracts today. I bought like 5, I did 5 trades today. I think I only got to call 2 of them in the group, 2 or 3. But if I'm aggressively trying to get in, I'm buying at the ask, bro, because I'm looking at it actively. I'm looking at my risk to reward. And I'm thinking about what I'm testing. I'm thinking about my strategy. I'm like, yeah, I want this contract, right? So because I want this contract, I'm getting this contract. So that's that. But on other times, I'll see it and I will set a limit. And I'll be like, I'm going to wait for it to come back to me because right now we're consolidating. Right now we're about to hit a potential, maybe be a little pullback right now. So I'll put in a limit order and let the price come back to me instead of me going to the price. Based on various strategies that I know, do I approach the market with a predetermined strategy beforehand? Do I wait to see what the market gives me each day? Such as I'm only going to look for reversals or I'm only going to look for breakouts. So when I'm testing a specific strategy live, like I've been doing this week, I'm going into it predetermined strategy. This is exactly what I'm looking for. I really, really don't want to trade anything but this so that I can really see how it would go with me live trading this. Now, outside of me doing that, it's kind of like if you like hooping. If you hooping, when you come down the court and you got the ball, you know what you want to do. You know if you want to shoot. You know if you want to drive. You know if you want to see if one of your boys get open at the 3. And so you're sizing it up as you're coming down. You're surveying. And then as things happen, you might start to shift, right? The market might be trending in one direction heavily. So I'm not really trying to trade reversals, right? My defender might be playing off of me. So I'm like, dang, you gonna give me that much space? I bet, So it's different things like that. Right. Just that's my example. Quarterback, wide receiver, same thing. Matt Stafford wants to go to Cooper Kupp. He getting triple teamed. You gotta adjust. All right. So you do go in. I do go in with an idea of today. I'm about to look at this. A lot of times I am testing strategies and different things because I really want to be able to have a strategy that I can come to y'all and be like, hey, here. But a lot of times when I'm doing all these different things of breakouts of this pattern, that pattern, this pattern, that pattern, I can't really give you bull flag the way I see bull flags to an extent, right? Kari said, let's hoop next time I'm in Atlanta. I'm gonna be in Atlanta. DM me, bro. DM me. I'm gonna be in Atlanta soon. DM me. So yeah, that's how I come at it. You know, I have a general idea of what I want to do. I know if I'm swinging, like if I'm like, yo, I feel like taking a swing, then there's certain different things I'm going to look for swings. I'm going to go look at a bunch of different charts. I'm going to see what has some gaps to fill. I'm going to see what's bottoming out on certain time frames. I'm going to look at the weekly chart. Like SPY had a huge bullish weekly close because it pushed all the way off that low. I'm still in those SPY calls. That was 414 for 412 for October's. Like I said earlier, my close was going to be a daily close below 412, or not 412, 372. We pushed 372, but then we shot right off of it, which is why I didn't close. Right. And that goes to somebody else's stop loss question. Me trading with price-based stop losses, I could have got stopped out there, but I also usually look for closes because I'm not about to get, you're not about to wick me out, bro. Come on, dog. Nah. So yeah, it's a basketball approach, bro. Come down the court, survey, figure it out. If the market sags off, pulling a three. Market plays too close, passing it off. You know, pick and roll, cut to the basket, whatever, set a screen, whatever you got to do, right? But you have to trade the market. Like I said, trade the market. Don't let the market trade you. You know, so you have to adjust. And again, number 10 on this list is learning those multiple strategies so that if we're in a trending market, if we're in the market that's choppy, and you've seen it in the group where, you know, people would be like, I'm not trading today. You know what I'm saying? The market's doing this. I'm not trading today. And I'd be like, screw that. Let's get it. Bow, bow, bow. 20%, 30%, bow. You know what I'm saying? Like, bro, forget that. I'm getting a bag today. I don't care. But that's because, again, I've studied all these different strategies. I got all this stuff up here that I've tested out. So if I'm using a price action based strategy and a price action is nasty, or if I'm using a moving average strategy and the moving averages don't look good, or if I'm using an RSI based strategy and it don't look good, then I have a Bollinger Band based strategy. And if that don't look good, then I have a multi-time frame MACD strategy I can look at and see if that's, you know, something popping on that. You know, like, I'm gonna get mine. You know what I'm saying? So for sure. Everybody's saying now we got a hoop. You can do that. Don't step back mid-range on me, bro. But cool. Do we have any other questions about what we covered here? Feel like that's good. We are about to hit that hour 30 mark, which is fine. I would just stop the recording and start a new one so people on YouTube aren't like, oh my God. I can watch a movie or I can watch Jordan Zoom. I think I still got to get that 5-hour one uploaded. Like, it was a 5-hour clip. So I gotta get it cut up. But if that's it, I'm gonna go ahead, stop the recording. I'm gonna allow everybody to unmute. You know, if y'all want to talk, chop it up. I know Dennis got something to say. I don't know what he got to say, but you know Dennis got something he want to say over there. All right, let me end the recording. This recording will get put up. Can't promise that it'll be tonight because I just got a new laptop, just updated Zoom.